Welcome back. And today I'm going to go over insurance and property tax crisis and how it's affecting the U.S. housing market, in particularly the affordability of consumers buying their first home. If you see any value on this video, please like and subscribe to my YouTube channel. Thank you so much. So according to the Wall Street Journal, it says insurance and taxes now cost more than mortgages for many homeowners. Okay. Ballooning expenses rewrite the math of home ownership. So furthermore, now if you look at the more cheaper home prices in a country like the Midwest, half of the monthly mortgage payments to taxes and insurance. Look at this. In upstate New York, Rochester, Syracuse, 35% of a person's monthly payment on home mortgage or consists of property taxes and insurance in addition to the monthly mortgage. And the other states, as you can see, Omaha, New Orleans, Fort Lauderdale, Florida, McAllen, Texas, El Paso, Houston, Buffalo, New Haven. See here are the corresponding percentages. This is very high. The taxes and insurance component should not be more than 20%. Should be like 15 or even 10%. For the percentage to be highest double digit to triple digit, that spells very problematic for the foreseeable future for American home buyers who is contemplating buying a house. The mortgage payments shared to taxes, look here, ever since 10 years ago, has skyrocketed. Rising property taxes, rising property insurance has continued to increase. 2014, it was like 20% of the total mortgage. Now, steadily increased for the past 10 years. Then until recently, at least almost one third of the mortgage, of the housing mortgage consists of taxes and insurance. And California, in particular, very sad. Condolences to the people who lost their lives on the wildfires that has occurred in Los Angeles in recent days. And it's going to affect the insurance industry as well, insurance policies, especially in California. And with the State Farm, have a very large presence in California, followed by Farmers, USAA, Travelers, and Chubb. This California wildfires burn out of control. And these large insurance company, either they're going to cancel all the policies for Californians, they're going to not do business in California, or they have to increase their insurance premium dramatically for California homeowners. So this is, and then before the pandemic, look at this. Skyrocketing home prices in the past 4 years is affecting the affordability for nationwide. We have the lowest affordability crisis in the past 30 years. Let me give you one example. Around 2022, in the middle of the pandemic, the home prices were a lot cheaper than it is today. The median home price, look at this. A mere 2.5, 3 years ago, the average median price mortgages, we're talking about just the mortgage, the principal and interest, were around $1,600. That's only a few years ago. As you can see, with rising mortgages, rising interest rate, elevated interest rate. Look at this. Now, with the median price of home approaching $400,000 nationwide, and then with the mortgage rate is around 7.17%, according to today's Mortgage News Daily report, which is the mortgage rate, high mortgage rate, 7.17% for people with good credit with 20% down payment. Okay. And with the median price of home of almost $400K, according to Redfin on this particular slide, now the mortgage payment itself, just the mortgage without the taxes and insurance, is around $2,500, right? Whereas 3 years ago was only like $1,500. We're talking almost 100% increase of mortgage payment. Just the mortgage, principal and interest, on a median price of a home nationwide, $400K. If you add on the increasing property taxes, increasing insurance, and then a homeowner probably needs some cash reserve to factor in maintenance costs and other costs associated of owning a home, you need more than $100,000 of annual salary nationwide to afford a median price of a home. Probably even more now that the lender nowadays, they're going to factor in the elevated taxes, property taxes, and insurance on top of the high mortgage payment with a high mortgage rate. So it's a doom and gloom out there. So skyrocketing home values coupled with is driving higher property taxes. Some states have higher property taxes than other, but in this article, according to CoreLogic, Miami became one of the hottest destinations in the country after the COVID pandemic began. And along with the skyrocketing home prices in Miami, they have skyrocketing property taxes in the Miami area comes along with it. According to CoreLogic, the median property tax payments in Miami County back in 4 years ago, like 56.8% since 56% rising property taxes in Miami. Right? If you look at other states, okay, you look at the tax rate. If you any kind of state, any states that have a tax rate of less than 1% is very ideal. Anything higher than 1% property tax rate it could be more challenging, right? Your mortgage payment going to be higher. Your PITI, right? PD, principal, interest, taxes, and insurance. You PD or factor in when you try to get a loan, right? The lender will calculate the PITI monthly, then compared to your annual income, your monthly income, then they will determine the DTI, debt to income ratio, to qualify you. Less and less people are able to qualify to get a mortgage, especially 10 to 20% down payment, which is another challenge on top of that. How many people have the ability to put 10 to 20% down payment on an elevated mortgage rate of 7.17% or even higher, or to some home buyers, right? And then you have increasing higher property taxes in various locations in the U.S. and insurance crisis with the hurricane and all the wildfires in various parts of the U.S. We're talking, this is Armageddon, right? So we all know property tax rate in Texas it depends on what county. The average property tax rate in Texas is 1.92%, which is very elevated. And if you look at other states, they are a lot lower. But then again, even though the Texas property tax rate is high, you still have a lot of people move there. You still have a lot of investors buying rental properties in spite of the higher property tax rate in Texas compared to the other states. Okay, so let me see what else. Not just Miami, Dallas, Fort Worth, Seattle, and Southern California are all suffering from rapidly rising tax bills, putting a damper on homeowners who might otherwise be bragging about their new Z estimates. The rapid rise of home valuations since the pandemic and stubbornly high mortgage rates have exacerbated the housing affordability crisis. We're becoming a renters nation. A lot of people are foregoing their ability to buy a house these days. So there are more people renting now than ever. So good for landlords, right? Property tax by county. Look at the tax rate. Okay, 1.4% in Broward, Florida, Miami, almost 1.4%. Dallas, 2.2, which is quite high. And you look at other states too. All right, let me see what else. Again, 77% of the U.S. households cannot afford a medium price home. So you look at this number, it's mind-boggling. All right, again, what happens to insurance premiums after the LA wildfires is gonna be high. Just wait for that. And it's gonna impact real estate, and insurances will be the forefront of California's minds. Yep, and insurance premium going to be higher after this very devastating wildfire in Southern California. So that's very troubling. Okay, you can read the rest of this article. Yeah, it's just, that they're, okay, Jimmy. So, who's going to bear the risk of the California insurance industry? It's not just the insurance company. It's the big reinsurance pools that sit behind the insurance carriers. So it's a ripple effect all across in the insurance industry, not only in California, but elsewhere in the country. So my takeaway is this is the new normal. Okay, the new normal is not only about the about the housing price appreciation is in like 2 or 3%, as a lot of housing experts claim. That's fine. Okay, housing prices is being stabilized in for various reasons, but the more important reason are the affordability crisis. Yeah, yeah. So I'm not saying people still can afford it, right? If people need to buy a home, primary home to live, they will find a way if they qualify in spite of this increasing costs. So each individual we need to determine what's their motivation to buy a house, or can they afford it? If you can afford it, buy, because your life situations would dictate that. But just be careful, do the numbers, work with a loan agent, get loan pre-approval, just put your financial house in order, your credit score, your down payment, your everything else, right? And your cash reserve especially, right? All right. So my takeaway is, yes, the news is not going to be good for the foreseeable future. The housing market is very volatile. So again, the American dream is still the best course of action for most people. But that's so you just have to move on, just try to overcome all these type of crises. That's all I can say. Right. With that said, that's my takeaway. So if you receive any value whatsoever, please like and subscribe and comment below on this particular YouTube video. And finally, if you want to become a free member of our real estate investment network, all you have to do is put your email below on the body of the description on my website and click the sign up letter, put your email on there so you become a free member of our real estate investing community. And therefore, every morning you will receive great free contents coming to your email inbox to educate you free of charge on various aspects of the real estate investment opportunities we have available, as well as we have ongoing general housing topics as per today's video as well. All right. So thank you so much for watching, and I will see you on the next video. Have a nice day. Bye-bye.